What's up, everybody? Welcome back to my YouTube channel. If you're new up in this place, thank you so much for joining me. And if you are a returning subscriber, thank you so much, Notification Squad, for being back here again. If you're watching this video and you haven't subscribed, please do subscribe. Hit the subscribe button below. It is absolutely free, and we are well on our road to 2,000 subscribers. I'm so excited. Anyway, so today I want to address this thing, right, about auditing, and basically how do we audit, how you get there. It's your first day, you have the theory, you know there are test of controls, you know the substantive procedures, but then how do you actually audit? Because as much as it happens to the most of us, it's also happened to me. I thought I knew the theory, I thought I knew how to do this thing, but you get in the workplace and you realize, actually, I don't know the first thing about audit, right? So I'm going to give you a very basic example on how we audit. I'll take you through the process. I hope this video is not going to be long, because I want to address this part of the audit, and also what is it that we do in audit firms that makes us so attractive to employers after we're done, especially people who come from the Big Four, especially but broader than that, I think people who just have done auditing as a training as a whole, they become a little bit more attractive. So we're going to tackle that in the later part of the video as well. So let's start with this, right? So look at a basic revenue. So you have this company that has a revenue of, let's say, 100 million rand sitting on their income statement. So we want to find out, on that revenue balance of 100 million rand, is it complete? Is everything that pertains to revenue been included in that 100 million? And then the next thing is, does that revenue exist? Is it really a valid revenue amount? Is it valid? Did it actually happen? And I think the risk, the riskier part of revenue is determining its existence and whether it is a valid revenue transaction than completeness. So there's more risk on existence of revenue than there is risk on completeness of revenue, mainly because why would a company not want to record revenue, right? It's very seldom that a company wouldn't want to. So anyway, in addressing these two risks, right, so the risks that you're working with is completeness and also existence of revenue. Does this revenue actually exist? The first thing that you need to do basically when you get there is you need to understand the process. And this is with every client that you will ever go to. With every client that I started at, I had to first start from the process. What is the process that this company goes through when they have to record revenue? And mainly the process will consist of an order. There will be an order that comes in from a customer. There will be a picking slip that the company uses to pick the goods from the warehouse or whatever. There will be a delivery note which will indicate that the goods have been delivered. It will have the customer's signature and it will have a date. And then there will be an invoice that is generated when revenue is when the goods are delivered. So we'll generate the invoice and say, this is the stuff that we have delivered to you, these are the prices, and then you pay that amount. So upon payment of the invoice, that's when the revenue goes into the bank account and it forms part of the 100 million that we see in the income statement. So that is the process, right? That is basically what happens from initiation to recording. So as an auditor, when you get in there, you need to understand this process, as I've already mentioned. The second thing that you need to do is you need to look at what are the controls within this process that ensures that this revenue transaction actually moves from being an order to being in the 100 million in the income statement. So you need to determine what controls do they have. Okay, do they have somebody checking that every delivery note is signed? Because if you come across a delivery note that's not signed, then how do you know that the customer has taken the goods? How do you know that the goods have been delivered? And if you don't know if the goods have been delivered, can you say this is a valid revenue transaction? What if the company is just recording a revenue for no goods delivered or for no goods sold? You know, so that's one of your risks. You need to, as an auditor, see if there are any controls in there to ensure that for every signed delivery note, revenue was recognized. So if you come across a delivery note that is not signed, but there is an invoice that has been processed, then you need to ask them, how do you know that this person has taken the goods? Remember, we audit according to the IFRS standards, and we need to abide by those. So that's basically the process, and those are some of the controls that you need to look in there. Okay, cool. So now you have your controls. You know what controls are in there. Remember, the more controls you have, the less work you have to do, because you know that their controls are working, and we're ensuring that the 100 million is complete and it does exist. So you move on from that, and then you come to your substantive testing. Now, your substantive testing depends highly on the results of your control. So if you assess your controls that they are effective and they're working, then you don't have to do as much substantive work as you would do if the controls were not working. So what substantive testing is basically just selecting a sample. You get a whole listing of every invoice that the company has had for that year. So if, for example, you went to ShopRite and you bought a pack of snacks, maybe that invoice that you had to pay for that pack of snacks, if we come in as auditors and we ask for the sales listing, we are going to find your invoice in that. So it's basically a very long Excel spreadsheet of each and every invoice that the company has had for the whole year. Guys, these things are extremely long. Okay, so from that, you'll select your sample, and then in your sample, what will you test for? So for every invoice that you select, you'll probably either test for you want the invoice and you want the delivery note for you to see if the customer has signed, because signature of a customer means you've received the good. For example, think about it like this: when you get an order from Take a Lot, right, they deliver it to your door. They ask you to sign either electronically, or they scan in something, or something happens just to show that they have actually delivered the goods to you. And when the goods are delivered to you, that's the only time Take a Lot can recognize income. So basically, that's what we're also looking for. If I have this a listing and I'm looking at the delivery notes that have been signed, or that have a stamp, or that have some sort of signage that somebody has accepted the goods, then we know that this listing is valid, or this invoice is valid, and we tick it off. So that's basically how we test revenue, and that's basically how we audit. This process is the same for every other account of the company. So be it PPE, be it creditors, debtors, everything. But obviously the procedures will be different. We're looking at the different risks of the accounts, right? So the second part of this video is, what then in this process that we go through as trainees is so attractive to employers when you're done, right? The first thing is, when I go through this process, so like for me, like I've mentioned, I've done the revenue stuff for so long now, for so many entities, and obviously all of those entities are in different industries. So I've seen how revenue works in the steel industry. I've seen how revenue works with telecommunications. I've seen how revenue works with pharmaceuticals, things like your Discam, things like your clicks. I've seen how revenue works with transportation companies, stuff like that. So what makes me attractive to these people is my knowledge of processes in different industries, and the fact that I am very aware of what controls need to be in place for a certain process to be effective. So as you go onto every client and you look at the process and you look at the controls, you become more aware when things are not being done correctly. And it is that skill of identifying what is missing that is attractive to employers after you're done. And it's more attractive because you've been to various entities and you've rotated to various industries. So you're more adaptable, right? So even if I didn't have, for instance, let's say I didn't have a pharmaceutical entity while I was still in training. A pharmaceutical entity and outside who's looking for a financial manager still sees me as attractive because I've been to various other entities and I've done this over and over and over again, that I have the ability to adapt to the pharmaceutical industry, and I have the ability to see if in their company their processes actually do have controls or not. And I think this is one of the things that makes CAs good entrepreneurs, because we know how the process should be. We know how things should be done for a company to be effective, for a company to make revenue, for a company to be effective in its process, and to implement their processes in line with the IFRSs, and to ensure that everything runs smoothly. So we've gone through that process through our training, and we are now able to identify that. So compared to somebody who just went to one specific company and you did your articles or your training there, you've only seen one process, right? And you probably haven't rotated to the revenue section, to the creditors, to the debtors, to the legal a part of it. You've only sat probably in the finance department and you've worked through the finance stuff. So for us, I don't necessarily work in a finance department of my clients. I can audit their revenue, I can audit their data, I can audit different things. And that's how it is as you move from first year, second year, third year. First year you get basic processes like your bank and cash, your PPE. You get to see those processes. When you move to second year, you now get into your revenue processes, you now get into creditors, you now get into legal and all of that. When you move on to third year, you now get into the inventory. How do they produce this? How does the standard cost work? How does their budgeting work? How do they bring in everything together to come up to the profit that they have in the income statement? And that is the skill that people are looking at. Do you know the business from inside out? Do you know the processes? What controls should we put in place for our business to go forward? And that's what makes CAs good business people. The fact that we can identify controls, the fact that we can add value in that sense, right? As compared to other people who did not go through that process in their training. I'm not saying it's not impossible. They can learn through time, because obviously we also learned through time. It's just that we learned it earlier in our training than they would have, because they would now have to learn it on the job. So basically that covers it. I hope that covers it. And yeah, I think that's what makes CAs good business people. I've also had this conversation with my counseling partner, and he was telling me that he could leave being a partner right now and actually start his own business, because he knows how to run a business. He knows what processes you need in a business to make it work. I think the most difficult thing for CAs to be entrepreneurs, and what would make it very difficult, is the ability to sell. I don't think we have that skill, that selling skill, because every entrepreneur should be able to sell, guys. If you're going to be an entrepreneur, you need to have a skill. You need to have a skill to sell. So I think that's one thing that we are not very much trained in it. But if you give us an existing business, we can refine the processes of that business to give you the utmost value that you can ever get from your business. So I think that covers it. I hope you guys found this video. I know it was maybe a bit too technical, but yeah, that's how it works, and that's what we do on a daily basis. It's just that we do it in different entities, we do it in different processes, but at the end of 3 years, you've seen pharmaceuticals, you've seen telecommunications, you've seen steel industry, you've seen Eskom, you've seen everything under the sun. Well, not everything, but you've been exposed to a lot more than what you would have been exposed to had you just gone to a very specific company to do your articles. So yeah, that's my take on it. I don't know if you guys have any questions, any comments about this. You can leave them down below in the comment section. Otherwise, I will see you guys in my next video, and I hope you're keeping well and keeping safe. I will see you next time. Bye.